Hey everyone, Scott Smith, the Smith team at Keller Williams. Happy Friday, heading into Easter weekend, Good Friday. Wanted to share with you what is going on with the real estate market right now. Obviously, we are hearing a lot of news about inflation and interest rates. So I just wanted to share with you a couple quick points and a nice graphic that we got that we shared in this email about how the market is impacted by the changing interest rates and inflation. So, a couple things about that. Every time we talk about what's going on in the real estate market, the market is always in flux. It's not quite the same as a stock market where you might see minute by minute changes because obviously real estate takes a little bit longer to transact. But what we're seeing is some of those fluctuations come into the marketplace right now. It's always going to be kind of a changing market dynamic where we're going from a hot market to a stable market to a cool market. And either way, whatever market we have of the moment, it's going to be benefiting either buyers or sellers. It's not always in balance, but it's always going to be benefiting more the seller's market or the buyer's market. So you can't have your cake and eat it too when it comes to that. So a couple things. We are seeing interest rates kind of ahead of what everyone had predicted, trending upwards, close to touching that 5% mark, which sounds horrible compared to what we had before, under 3%. The days of the 4% interest rate, 30-year fixed, are most likely gone. As we see the Fed raising interest rates and mortgage rates, we are seeing probably going to be more stable around that 5% by the end of the year. So which, it is what it is. There's not a whole lot that we can control with that, but there are some strategies that we've worked with our clients on how to take advantage of maybe a little bit lower interest rate opportunity, whether it be looking at an adjustable rate mortgage, maybe looking at a 15-year interest rate, 15-year amortization with that too. So a couple of things as you look at the impact of historically how the interest rates having a larger jump or a quicker jump in interest rates has impacted pricing, and how it's also impacted the activity within the marketplace. And you'll see with the graphic that the pricing actually, as interest rates went up, the prices also continued to trend upwards, but maybe more stabilized as what we've seen in the past. We're not going to see the 20-30% jumps, and that's why the Fed is raising interest rates to keep the market activity in check and make the market a little bit more healthy than jumping up like that. So it's always supply and demand one-on-one. The more homes we have available for buyers and the liquidity of money, cheap money was really fueling our market with the really low interest rates. And a lot of people were pushed out their plans for moving because of COVID and the economic uncertainty. So as we're seeing some of those things change and influx, that's going to certainly change the supply and demand. But what we are seeing right now in today's market, in April 2022, we are seeing more and more new listings come on the market in the spring market, fewer showings and fewer multiple offer situations. Not to say that they're gone, but we're definitely seeing the market trending towards stabilization. So just a few points, and again, we wanted to share that with you. Enjoy the Easter weekend. Hopefully, we get some warm weather soon because obviously we don't want to have the cold and the snow in April. Can't wait till May. Take care and have a great weekend. Bye now.